Hello everyone, welcome back to our YouTube channel. This is Silver Trading Channel, where we discuss strategy that are best suited in Forex market. If you are new, kindly remember to subscribe and press a notification button. Today I would like us to discuss one of my best strategies. When you look at our window, we have three windows. So we have the first one, which is in the main chart, window 1, then window 2. Why do we have three windows? The first two main window, this is the second, then this is the third, or we call it, the first is the main chart, window 1, then window 2. The purpose for these three windows is for us to have perfect entry into the market. Allow me to take you through different time frames. This is Australian dollar against Canadian dollar. This is 30 minutes chart. Let us use a different currency. This is GBP USD. This is a daily chart. We can check at it. Let us go to a different currency. CAD JPY. We can see different time frame. That is 4-hour time frame. This is 30 minutes time frame. Then we have 15. Why do I really rely on this strategy? One, the main chart gives me general direction of the market. Window 1 tells me when the market is at the highest point, maximum and minimum points in the market. Where the second window gives me the entry. That is the purpose of having these three. The main chart, window 1, then window 2. When you are on the main chart, we are able to tell the direction of the market. This is CAD JPY 4-hour chart. We have three moving averages. The first, there is yellow moving average, There's blue moving average and there's black moving average. This best gives us the direction of the market. Let us go to daily chart. This is our daily chart. We are able to tell the direction of the market. Well, the first window gives us the highest and the lowest points in the market. The last or second window gives us the perfect timing to enter the market. So let us go through the main chart. So for you to have these three EMAs, we have three EMAs. So if you want to insert them, you go to F button. Which is this one or this one. You press, then you are able to insert the first moving average, we have the second, then the third. But first you have to press this F button. So the first moving average is 200 as denoted above, 200. Then our shift is going to be 0. Method is going to be linear weight, then closed. For pixel, you can pick a yellow. Then after that you press done. Our second moving average is going to be 50. Shift is going to be 0. Method is going to be linear. Apply closed for pixel. Then you press done. Then we go to the third moving average, which is 800. Shift is 0. Method is exponential. Apply to we close. Then color, you can pick black. Then we will go to the second window. This is the window indicator, I mean. So in the window indicator, we are going to go to on balance, which is under volumes. This is the on balance. So we are going to have apply is going to be closed, then we pick the color, then we are done. Then we are going to go to average directional movement index. So this is how it is going to be. Period is 1, style is 1 pixel, D plus DL 1 pixel minus DL, that one. Then the levels we are going to have 95 and 5. Then we are done. The other window is going to be stochastic. So these are the values: 80, 33, low and high, simple. Then we are done. After setting your trade like this, one, what you have to know, this one works on all time frames. All time frames. all time frames. It will work very, very, very well. Then what are the conditions for us to enter such kind of a market? So for us to enter this kind of a market, one, we must have a glimpse of the direction. We've said the direction of the market is known by the indicators on the main chart. So indicators on the main chart, this is the main chart, will give us the direction or trend of the market. So let us see. So at first we are seeing 50 moving average is crossing over 200 moving average, which is yellow. Then both of them crosses over 800 exponential moving average. Then this one tells us the market is descending. The market is descending, and at the same time, when you look at your indicator window 1, you are able to see that the market has reached the maximum level. How do we tell about this? You just move your screen forth and back. When you see the ADX still remains on 95 level, like check, you see, if you move it back and forth, it keeps on changing. Like look at this scenario, when you move it, then it drops. Then with that, you are able to establish that that is not the maximum or the highest point in the market. So you move it to, and you move it like that. After knowing that that is the highest point in the market, then you go back down to your stochastic level. Your stochastic level should have reached 90 level. Then when it is sell, it is supposed to drop back to 80. At that point, then there are two conditions that have been achieved. One, we've reached the maximum point in the market and our trend has changed. Then stochastic gives us the best level to enter the market. So we enter our market at level 80. We sell if the market is descending. That is the first condition. Well, now you sell. So check if we could have sold at this point, then we could have earned this one to the lowest point in the market, which also comes to this one. That is where you exit the market. You exit that market at that point. Now check. This also became the highest point again. This one and here. Then we see we enter at this point. We enter here, which is somewhere there. then we are able to ride our market to the lowest point, which is at this point and also at this point. Then we wait to see the lowest point ever. Now when we want to buy, we check where our ADX has touched the lowest point, the minimum level in the market, which is at 5. So to confirm, we move it back and forth to see if the lowest point of 5 is still maintained in ADX or window 1. You see, it is still maintained. So that one tells us that that is the lowest point of the market. So when the market reaches at the lowest point, then we know for sure direction has to change. So for the direction to change, then we go back and look at our stochastic. Where is our stochastic to give us the entry? Because now we are aware the market wants to change the direction. Then stochastic is able to tell us at which point of the market is where we can get the best entry. We are supposed to enter the market when the stochastic has gone to 10, then it is coming back to level 20. There is where we enter. At level 20, we enter the market because now we are sure the market wants to go higher. Those are three points to note when you're using this strategy. This is one of my best strategies. You see, very good strategy. Very good strategy to use in the market. Let me give you, this is now another best example. Now check. When you look at this market, we cannot enter at this point now. Sorry. Mistake that most people tend to do. You have only this one which tells you it is at the highest point, which is okay and it has changed direction. But does it gives you the right entry? Look, this one alone can push you out of the market. So we have to wait for this one to come back to that level. We have to wait for that pullback. Because already we are seeing a change of direction has started. So we have to wait for this pullback. Then we'll enter at that level. So this one demystifies. You cannot enter on, you cannot base your entry on this one alone, that level. For you not to be pushed out of the market, we have to wait for this stochastic to come back, because already stochastic is about to reach 20, which means if you enter in that point, your stop loss is going to be more pips. Look, at this level. So at 1.70455, then the other one is stop loss is going to be at 1.73140. That one is too much. So for you to get the perfect entry where you cannot be pushed, the market cannot go against you, we have to wait for our stochastic to come back to level 90, then it changes the direction and comes to 80. Then there we are safe to enter that market. Let us check on another. Now see, this change of direction. This is another scenario, a mistake that one may make. This was the highest point for entry, and now already we knew there was a change in direction because already we had these two crosses. So now what we are waiting for is this market to pull back to this point. After pulling back, there is where we are supposed to end. That in fact will be a second entry. The first entry could have occurred here, and here. That could have been the first entry. Now for this to come back, this is going to be second entry, because this is a higher time frame. You see, that is on a daily chart. So on a daily chart, it means we still have to wait for this stochastic to come back at that point, because with this one is still at the maximum. This is on a daily chart. So we are supposed to wait it to come back to level 90, then it turns to 80, then we enter the market. Guys, if you go through this video several times and note all that information I've given you free of charge today, I've laid bare. This is my killer strategy. Then you'll be able to understand it. Don't have hurry. Better understand it and preserve your money. Then you'll laugh to the bank. Thanks a lot. God bless you. Remember to subscribe and drop a comment. Have a good day.